Welcome to The Deep Dive, the show where we cut through the noise and get straight to the insights that matter. You know how sometimes technology seems to advance incrementally. It's just small, predictable steps forward. And then, out of nowhere, something truly revolutionary arrives and completely rewrites the rulebook. Well, today, we're plunging into one of those game-changing innovations, generative AI, or GenAI, and its profound, transformative impact on an industry that touches every single one of our lives' insurance. Our mission today is to unpack how GenAI is moving far beyond simple efficiency gains. We're going to explore how it's fundamentally reshaping how insurance companies operate, how they manage risk, and perhaps most importantly, how they interact with you, the policyholder. We're talking about a shift that affects everyone, and we'll uncover some surprising facts and perhaps a few aha moments that show this isn't just tech jargon, but a foundational change.
What's truly striking here, as our sources highlight, is the sheer scale of this transformation. This isn't just an incremental upgrade. It's explicitly called a catalyst for fundamental business model transformation in the insurance sector. We're not talking about a ripple. This is a tidal wave poised to redefine the industry.
And when you look at the numbers, it's clear this isn't just speculative hype. The global market for GenAI in insurance is projected to grow to a staggering $5.7 billion by 2029, with an astonishing compound annual growth rate, or CAGR, of 39.4%. That kind of growth indicates a monumental shift in investment and adoption.
Precisely. While insurers are seeing immediate value in operational efficiency across areas like claims, underwriting, and customer service, the real long-term strategic prize is far greater. It's about moving toward proactive risk prevention, augmenting the human workforce, and delivering unprecedented levels of personalization and, well, empathy to policyholders. Imagine an insurer that doesn't just pay when something goes wrong, but actively helps you prevent it.
Our sources pinpoint 5 key use cases that are already delivering measurable returns on investment, and we're going to dive deep into each one of them today. But of course, with any major transformation, there are foundational challenges. We're talking about preparing vast amounts of data, navigating the complexities of existing legacy systems, and arguably, most critically, managing the massive undertaking of organizational change and getting people on board.
And that leads directly to a non-negotiable aspect, the imperative of responsible AI governance. This isn't just a buzzword. It's essential for mitigating the significant risks associated with data privacy and evolving regulatory compliance. Getting this right is crucial for maintaining customer trust.
Absolutely, and ensuring these powerful tools are used ethically and fairly. So buckle up. We're about to embark on a detailed exploration of how these changes are already unfolding, what kind of quantifiable results insurers are seeing on the ground, and what the future of risk management and policyholder relationships might truly look like. So we've set the stage with the big picture and the immense projections. But where is GenAI actually making a tangible difference right now, with real, quantifiable impact in the insurance industry? Our sources point to 5 key areas that are moving beyond theoretical discussions into actual, measurable results. Let's dive into each one, starting with an area that probably every one of us has experienced at some point: claims. #TagCAG 1.1. Revolutionizing claims processing and automation.
Right, claims processing. It's often called the moment of truth for any insurer. It's that critical juncture where a policyholder directly experiences the value of their coverage. Historically, though, this process has been notoriously inefficient, incredibly costly, and heavily manual. Think about it. A single claim can involve a virtual mountain of unstructured documents, everything from initial call transcripts and detailed medical reports to stacks of repair invoices, legal paperwork, and countless damage photos.
Wow. And all that manual review traditionally leads to painfully long cycle times, right? Which directly translates into customer dissatisfaction at a time when they're often already distressed. Plus, there's a high potential for human error and what the industry refers to as leakage, essentially, overpaying claims due to inefficiencies or mistakes. Can you put a number on that leakage? What does that really mean for an insurer's bottom line, or even for us policyholders?
Absolutely. Bain and Company, for instance, estimates that this leakage can account for a 30% to 50% reduction in potential savings from claims loss-adjusting expenses if not properly addressed. It's a significant drain. And this is precisely where GenAI, particularly its proficiency with large language models, or LLMs, and computer vision, steps in. Its core function is to automate the analysis of all that unstructured data and significantly augment the decision-making capabilities of human adjusters.
Okay, so how does it actually do that? Let's consider automated document ingestion and summarization. Imagine submitting a claim, and instead of someone manually sifting through dozens of PDFs, emails, and notes, GenAI uses natural language processing to instantly classify those documents, extract key information like policy numbers, dates of loss, names, even diagnosis codes. It can then generate concise, accurate summaries of complex claim files. Is that the idea?
Exactly. A claims handler, instead of spending hours reading through a dense medical history or a lengthy accident report, can simply ask the AI for a targeted summary. This allows them to focus on the critical decisions and significantly reduces the manual review time, which, as you pointed out, directly impacts customer satisfaction.
That makes perfect sense. But how about something more visual? This next capability sounds genuinely transformative. Automated damage assessment. Especially in property and casualty insurance, GenAI models can analyze images or videos of damage, whether it's a crashed car or a storm-damaged house submitted by policyholders. It assesses the extent of the loss, identifies damaged parts, and even estimates repair costs.
That's right. This capability enables what we call touchless or low-touch claims. An initial assessment and maybe even a settlement offer can be generated almost instantly, often without the need for an on-site adjuster visit. Companies like Tractable AI have pioneered this, allowing insurers like Geico to automate damage assessments directly from photos. And a collaboration between PwC and an auto insurer even identified a potential 29% efficiency saving for their estimator teams using AI models for damage classification. It's really a remarkable leap forward.
Wow. And beyond just assessing damage, GenAI can also assist with liability assessment and subrogation, right? Analyzing incident descriptions, comparing them against policy terms, legal statutes, helping automate liability assessments. Our sources indicate this is proven to be highly accurate, over 90% accuracy in auto claims and 95% in property claims. That's impressive.
That level of accuracy directly translates into improved financial outcomes for the insurer. One analysis showed it can lead to a 30% increase in the acceptance of subrogation referrals, where an insurer recovers costs from a third party who was at fault. And it streamlines communications, too. GenAI can draft personalized customer updates, ensuring consistent tone and freeing adjusters for more nuanced, complex interactions.
The quantifiable benefits really are striking. In terms of speed and efficiency, consider this. A U.S.-based travel insurer, which processed 400,000 claims manually per year, reduced its average processing time from 3 weeks to just 2 minutes. 3 weeks to 2 minutes.
Exactly. That's 57% full automation with 98% accuracy on pay decisions.
Incredible. And then there's Lemonade and its famous AI gem bot, which settled a claim in a record 3 seconds.
Right. Lemonade now handles approximately 40% of its claims instantly from submission to payout without any human intervention. It's just a staggering compression of the claims lifecycle.
It absolutely is. And these efficiency gains translate directly into significant cost reduction.
That's right. Bain & Company estimates that at its full potential, GenAI could reduce P&C claims loss adjusting expenses by 20% to 25%, and, as we discussed, reduce claims leakage by 30% to 50%, ultimately creating over $100 billion in value for insurers and their customers.
And crucially, this drives improved customer satisfaction, or CSAT. A faster, more transparent, and less cumbersome claims process isn't just about operational efficiency. It fundamentally shifts the customer experience. It flips the script on customer loyalty in an industry long associated with waiting, transforming a moment of stress into one of swift resolution.
So, what's the bigger picture here? What does this all mean? This revolution in claims redefines the very nature of work. It's leading to the emergence of what we're calling the bionic adjuster, a human professional whose expertise is significantly augmented by AI. The traditional adjuster's role, which was heavily administrative and focused on processing, is evolving. The future adjuster will focus on complex negotiation, empathetic communication during often traumatic events for policyholders, and intricate fraud investigation. These are areas where human judgment, creativity, and emotional intelligence remain irreplaceable.
That has huge consequences for talent strategy, doesn't it? Insurers need to shift their hiring profiles away from process-oriented individuals toward those with strong analytical, negotiation, and interpersonal skills. And training programs must be completely redesigned to focus on working collaboratively with AI tools, interpreting their outputs, and expertly managing the exceptions the AI flags for human review.
Absolutely. Furthermore, the data generated by AI-driven claims processing creates a truly dynamic, self-improving risk ecosystem. Traditionally, insights from claims data might be analyzed annually to update underwriting models. GenAI changes this paradigm by extracting granular insights from thousands of unstructured claims documents and images in real time. For instance, it can identify that a specific vehicle component consistently fails in low-impact collisions based on an analysis of repair invoices. This provides a continuous stream of rich empirical data directly back to underwriters, transforming static, periodic review into a dynamic, continuously learning system. This creates an opportunity for insurers to become proactive risk management partners, potentially issuing alerts to policyholders about identified risk before a loss even occurs. Hashtag 1.2. Enhancing underwriting and risk assessment.
Okay, so we've seen how GenAI is transforming the reactive side of insurance with claims. But what about the proactive heart of the business, how insurers assess and price risk? Underwriting has always been a deeply manual, experience-driven discipline, relying on historical data and manually reviewing often incomplete or unstructured information. Can you explain the core challenges here for an insurer?
Certainly. This process is inherently slow and labor-intensive, with underwriters spending as much as 40% of their time on administrative and non-core tasks. This creates significant delays in quoting and policy issuance, directly impacting customer experience and competitive advantage. Beyond that, human judgment, while invaluable, can sometimes introduce inconsistencies and unconscious biases, leading to suboptimal risk pricing.
Right, so this is where GenAI steps in to empower underwriters, allowing them to analyze data more comprehensively, make decisions faster and more consistently, and price risk with much greater precision.
That's right. One of its key roles is holistic risk profile generation. GenAI can move beyond traditional data points like credit scores or driving records to incorporate unstructured information from public records, news articles, social media sentiment, satellite imagery of properties, and even real-time IoT device data. This creates a comprehensive and dynamic risk profile, offering a far more nuanced view of risk than was previously possible for individuals or businesses.
And just like in claims, GenAI also excels at automated data extraction and analysis in underwriting. Paired with optical character recognition, or OCR, it can automate the extraction and organization of key information from lengthy documents like emails, complex contracts, and financial statements. That sounds like a huge reduction in manual burden, saving time and reducing potential error.
It is. And this capability also enables personalized policy and pricing generation. By analyzing an individual's or business's unique risk profile in granular detail, GenAI can assist underwriters in generating highly tailored policy terms, suggesting appropriate coverage levels, and recommending optimized premium pricing. This moves away from the traditional one-size-fits-all products, which often leave customers either underinsured or overpaying for coverage they don't need.
And this next bit sounds truly forward-looking, almost like peering into the future. Emerging risk identification and simulation. GenAI can analyze patterns in vast amounts of historical and real-time data to identify new risk trends, like novel cybersecurity threats or the localized impacts of climate change, long before they show up in traditional actuarial tables.
Exactly. And what's particularly powerful here is its capability for synthetic data generation. This allows insurers to model the potential impact of rare but catastrophic black swan events, stress test their entire portfolios against these scenarios, and even develop new products for risks that were previously considered uninsurable because there wasn't enough historical data to price them responsibly. It's really about modeling the future, not just analyzing the past.
In terms of quantifiable benefits, we're seeing significant efficiency and speed. One case study of an AI-powered underwriting platform showed a reduction in average review time from 14 days to just 4 days, 14 down to 4.
Yes, driven by an 85% reduction in manual document handling. That's a massive speed up in a process that's historically been a bottleneck.
And this speed leads to improved accuracy and consistency, I assume.
It does. By automating data extraction and checking submissions against guidelines, GenAI mitigates human error and ensures underwriting rules are applied consistently across all cases. The same case study reported an impressive 99.2% data extraction accuracy. Ultimately, this translates to enhanced decision-making, leading to better loss ratios and improved profitability for insurers. Zurich Insurance Group, for instance, is using Microsoft Azure OpenAI service as coaches for their underwriters, helping them gain the equivalent of years of experience more quickly.
So what's the bigger picture here for underwriting? This sounds like a pivotal shift from reliance on historical actuarial science to predictive, real-time risk management. It's fundamentally changing how risk is understood and priced.
Precisely. This evolution has profound implications for product design, leading to the rise of living policies and usage-based insurance, UBI, where premiums and coverage could adjust dynamically based on real-time behavior. Imagine auto insurance premiums adjusting midterm based on verified safe driving habits through telematics data, or commercial property premiums changing based on the installation of new safety equipment detected by IoT sensors. It's about continuous adaptive coverage.
That's fascinating. And it also seems to be democratizing complex expertise. Gen AI can act as a co-pilot or coach for less experienced underwriters, encapsulating institutional knowledge and flagging issues they might otherwise miss.
Yes, this significantly flattens the learning curve for new talent, allowing insurers to scale their expertise far more quickly. Strategically, this means insurers can expand into more complex and profitable niche markets without needing to make a linear and often prohibitive investment in highly specialized senior underwriters. It directly addresses the talent shortage in the industry by leveraging AI to make less experienced staff far more productive and accurate. Hashtag 1.3, transforming customer service and engagement.
Now let's talk about customer service. In today's digital economy, policyholders demand 247 availability, personalization, and immediate resolution. But the traditional insurance customer service model, with its static phone trees and basic chatbots, often falls short, leading to frustration.
Indeed. This often leads to long wait times, frustratingly repetitive conversations, and unresolved queries, ultimately damaging customer loyalty. And the inherent complexity of insurance products means that providing sophisticated and empathetic communication is crucial, something that first-generation bots simply couldn't deliver effectively.
But GenAI is truly transforming customer service by enabling interactions that are more intelligent, more personalized, and significantly more efficient.
The jump is evident in advanced conversational AI. GenAI-powered chatbots represent a quantum leap over their predecessors. Using sophisticated natural language processing, they can understand complex, ambiguous, and even colloquial language, maintain context throughout a conversation, and simulate empathetic, human-like dialogue across hundreds of languages. They can handle a wide spectrum of customer needs, from detailed policy questions and quotes to initiating the first notice of loss for a claim.
And this leads to hyper-personalization at scale. These AI agents seamlessly integrate with customer relationship management systems and policy administration platforms, accessing a customer's complete history in real time, which allows them to provide highly tailored responses, personalized product recommendations, and even proactive communications like premium reminders or policy renewals, all without a human needing to look up data across multiple systems.
Exactly. GenAI also acts as an agent augmentation or co-pilot for human service agents. It can listen to or read customer interactions in real time, providing the human agent with relevant information, summarizing the issue, suggesting the next best action, and even drafting responses. This significantly reduces average handling time and empowers human agents to resolve issues more accurately and efficiently. And crucially, GenAI can simplify complexity by rewriting dense, legalistic policy documents into plain, easy-to-understand language.
The quantifiable benefits are clear. For availability and efficiency, you get true 24/7 support. IBM estimates virtual agents can handle up to 80% of repetitive calls. 80%. Wow. That frees human agents for more complex issues, a massive productivity boost.
This directly leads to improved customer satisfaction, CSAT. Faster, accurate, personalized interactions boost CSAT and loyalty. For instance, Zurich's Zurich chatbot resolved 50% of inquiries without human intervention and achieved an impressive 70 NPS, that's a Net Promoter Score, a key metric for customer loyalty within its first 6 weeks. Similarly, e-commerce platform Meesho found its Gen AI-powered voice bot achieved 10% higher CSAT scores than traditional channels.
We're seeing widespread industry adoption. Companies like Geico with its virtual assistant, Allstate with ABA, and Progressive with Flow are all deploying AI assistants, handling millions of interactions annually, showcasing this isn't just a niche application.
Here's a crucial insight, though, and this is really important. Customers still overwhelmingly prefer human interaction for high-stress or complex situations. Think about a difficult claim or a sensitive policy issue. An implementation strategy that solely focuses on cost-cutting by replacing human agents with bots is a strategic error. The most effective model is a seamless hybrid approach where GenAI handles routine level 1 queries flawlessly, but is expertly trained to identify cues of frustration or complexity, executing a warm, seamless handoff to a human agent, transferring the entire conversation history and context.
So this elevates human agents from script readers to high-value brand ambassadors and complex problem solvers, requiring a skill set focused heavily on emotional intelligence, empathy, and de-escalation. Their role becomes one of true connection, not just transaction.
Exactly. Moreover, every interaction with a GenAI chatbot is a rich, untapped source of unstructured data. Analyzing these millions of conversations at scale can uncover systemic issues, identify common customer pain points, and detect emerging needs that were previously invisible to product or marketing teams. For example, a sudden, localized spike in customer queries about basement flood coverage in a specific zip code could serve as an early warning signal for underwriting and risk management. This transforms customer service from a reactive cost center into a proactive, strategic intelligence gathering hub, creating a powerful, real-time feedback loop for product development, marketing, and underwriting. Hashtag TAG 1.4, fortifying fraud detection and prevention.
Okay, moving on to another critical area for insurers, fraud detection. The business problem here is that insurance fraud is pervasive and incredibly costly, estimated at a staggering $308.6 billion annually in the U.S. These losses, of course, are ultimately passed on to policyholders through higher premiums.
Right. And traditional methods, relying on static rule-based systems and manual audits, are typically slow, resource-intensive, and ill-equipped to detect novel or highly sophisticated fraud schemes. What's alarming, and makes this truly an arms race, is that fraudsters are now leveraging GenAI themselves to create highly convincing fake evidence, manipulated photos, forged documents, deepfake audio, or video. This makes their schemes harder than ever to detect and significantly raises the stakes.
So GenAI provides a powerful new set of tools for insurers to combat this growing threat, moving beyond static rules to dynamic pattern-based detection.
One key capability is advanced anomaly detection. GenAI excels at analyzing vast, multimodal datasets, including text from claims forms, images of damage, and audio to identify subtle patterns, inconsistencies, and anomalies indicative of potential fraud. For instance, it can flag a claim where the written description of an auto accident is inconsistent with the points of impact shown in a submitted photograph, or where a photo's metadata suggests it was taken at a different time or location than stated. It's about spotting the microscopic cracks in a fraudulent story.
And this next point is a key differentiator for GenAI in the fight against fraud. Synthetic data generation. One of the biggest challenges in training effective fraud detection models is the scarcity of confirmed fraud examples, right?
Exactly. GenAI can overcome this by generating vast quantities of realistic synthetic data that mimics the characteristics of known fraudulent claims. This synthetic data can then be used to train traditional machine learning models to recognize new, evolving tactics without compromising real customer data, allowing insurers to prepare for the unexpected.
It's clever.
It also excels at network analysis. Organized fraud often involves collusion across multiple parties. GenAI can perform sophisticated network analysis across thousands or even millions of claims to uncover hidden relationships and identify rings of fraudulent activity that would be invisible to a human investigator examining claims case by case. And within strict data governance frameworks, it can even assist with behavioral and biometric analysis, analyzing voice patterns for indicators of duress or deception or sentiment in communications to prioritize investigations for human review.
The quantifiable benefits here are huge. We're talking high accuracy, with one provider reporting 93% accuracy detecting inconsistencies, a key indicator of potential fraud.
And the financial impact is enormous. Deloitte predicts that widespread adoption of AI-driven anti-fraud technologies could save property and casualty insurers between $80 billion and $160 billion by 2032, with potential 20% to 40% savings in fraud-related losses. This dramatically improves investigator efficiency as AI automates initial screening and flags suspicious cases, allowing human investigators to focus their valuable time and expertise on complex, high-risk cases that truly require human insight.
So what's the strategic implication of this ongoing battle? This arms race means proactive investment in defensive AI is not just beneficial, but a strategic necessity. The 300% increase in claims involving manipulated photos and documents in the UK between 2021 and 2023 is a stark warning. This isn't a static problem, it's a constantly evolving threat landscape where insurers must continuously adapt.
Absolutely. Fraud departments must evolve from reactive investigation units to proactive threat intelligence centers. They need to continuously use their own GenAI tools to model new attack vectors, generate synthetic threats, and retrain defensive systems to stay ahead of the fraudsters. This necessitates a rigorous governance framework, including a human-in-the-loop system where the AI flags potential fraud, but a trained human investigator always makes the final determination. This ensures accountability and allows for the nuanced judgment that AI alone cannot provide. Hashtag TAG 1.5, driving personalized marketing and product innovation.
Let's shift gears now to how GenAI is transforming the way insurers connect with you, the customer, and even how they develop brand new products. The business problem here is that the insurance industry has traditionally relied on broad market segmentation for its marketing efforts.
which often results in generic messaging and one-size-fits-all product offerings that fail to resonate with individual needs. This leads to low engagement, poor conversion, and missed cross-sell or upsell opportunities. On the product side, developing new solutions has historically been a slow, research-intensive, and costly process, making it difficult for insurers to respond nimbly to emerging risks or changing customer demands.
Right, and this is where GenAI comes in, providing marketing and product development teams with powerful tools to create highly relevant customer experiences and accelerate innovation dramatically.
The most immediate application is hyper-personalized content creation. GenAI can analyze a rich tapestry of customer data, including demographics, policy information, past interactions, and even publicly available lifestyle information, to generate highly personalized marketing copy for emails, social media, and ads that speak directly to an individual's specific situation and perceived needs. Imagine an ad that truly understands your unique life stage and offers relevant coverage, not just a generic policy.
It also offers efficient content creation and repurposing. GenAI dramatically increases efficiency, taking a core marketing message and instantly adapting it for different product lines, customer segments, and communication channels. What once took a full day of repetitive work for a human team can now be done in minutes, potentially.
Potentially, yes. It can also generate a wide range of marketing collateral, from blog posts and website descriptions to video scripts and FAQ answers.
And it significantly enhances customer segmentation and opportunity identification.
Exactly. By analyzing vast, unstructured data sets, GenAI can identify nuanced customer segments and new markets that traditional analytics might miss. It can also pinpoint high-potential cross-sell and upsell opportunities with remarkable precision. For example, after a customer files a home insurance claim related to water damage, a GenAI system could proactively trigger a personalized offer for flood insurance, capitalizing on that moment of heightened risk awareness with a highly relevant solution.
That makes sense. And for product development, GenAI enables new product development and simulation, accelerating the innovation lifecycle by simulating market scenarios, customer behaviors, helping design and test new products like parametric insurance or dynamic usage-based policies.
And once a concept is developed, GenAI can instantly generate draft policy documents, marketing materials, and FAQs, dramatically speeding up time to market and reducing development costs.
The quantifiable benefits are clear: increased engagement and conversion. Personalized content simply resonates more effectively with customers. One study found that 99% of marketing professionals using AI bots reported a conversion boost, with over half seeing an increase of at least 10%.
There's also enormous operational efficiency, as automation of content creation and campaign management reduces the time and costs associated with manual marketing tasks, freeing human teams for higher-level strategy.
And we're already seeing tangible results. Leading insurers like Liberty Mutual and Allstate are already leveraging AI for personalized email campaigns and targeting high-value customer segments, clearly demonstrating the power of strategic targeting at scale.
What's fascinating here, though, is the powerful potential for functional convergence that GenAI reveals. The granular 360-degree view of a customer that's built for a hyper-personalized marketing campaign is remarkably similar to the data and analytical techniques used to generate a sophisticated underwriting risk profile. Insights from marketing, like a customer's expressed interest in adventure sports, are directly relevant to their life, health, or travel insurance risk profile. This exposes a major strategic liability for many incumbent insurers: siloed data and disconnected technology between marketing and underwriting departments.
So there's a huge opportunity for competitive advantage if insurers invest in building a unified customer data platform that can serve both functions, excelling in both customer acquisition through tailored outreach and accurate risk pricing.
Precisely. However, the creative power of GenAI in marketing introduces a significant operational challenge: the compliance bottleneck. The insurance industry is heavily regulated, and every piece of marketing material, no matter how personalized, must adhere to a complex web of strict compliance rules. While GenAI can unleash a torrent of tailored content at unprecedented scale, each variation still needs meticulous review for legal, regulatory, and brand compliance, which can completely negate the speed and efficiency benefits if not managed correctly.
That raises an important question. What's the solution to that compliance bottleneck when GenAI can generate content so quickly? How do you manage that?
Well, the only viable solution is to build a governing component directly into the GenAI marketing engine itself. This involves using AI not just to create content, but also to pre-screen that content against a comprehensive and constantly updated knowledge base of regulations, product rules, and brand guidelines. This will likely give rise to a new, specialized role within organizations. The AI compliance auditor, skilled not in manually reviewing content, but in training, testing, and managing the AI models that ensure their creative outputs are compliant by design from the very first draft. It shifts the burden from reactive checking to proactive design.
We've covered a lot of ground with these use cases, from claims to customer service, underwriting to marketing. It's clear GenAI is already transforming operations. But here's the thing. Implementing GenAI successfully isn't just about picking a cool tool or finding a single task to automate. It requires a truly thoughtful strategic roadmap. So what does that look like for an insurer? Hashtag tag 2.1, defining a value-centric vision and strategy.
The key really is that effective GenAI initiatives are firmly anchored in solving specific high-value business problems, not just technology for technology's sake. The starting point for any insurer's GenAI journey must be a clear, C-suite-led vision that deeply aligns technology investments with core business objectives. The fundamental question should not be where can we use GenAI, but rather where are our biggest challenges and opportunities and how can GenAI help us address them to create measurable value.
Okay. And this vision should focus on three primary dimensions of value creation. First, profitability and growth. That means using GenAI to identify new revenue streams like hyper-personalized products or advanced loss prevention services, enhancing existing offerings, and accelerating sales by better matching products to customers.
Second, there's cost savings and efficiency, which is often the most immediate area of impact. This focuses on automating manual, repetitive tasks in functions like claims processing and underwriting to directly reduce operational expenses and significantly improve overall productivity across the organization. And third, operational intelligence and effectiveness, which centers on augmenting human expertise by synthesizing vast amounts of information and providing data-driven insights for better, faster, and more consistent decisions. Once this holistic vision is established, potential opportunities must be prioritized using a structured approach, evaluating each use case across its potential business impact, the value it delivers to the customer, and its overall feasibility of implementation.
So it's definitely a marathon, not a sprint, when it comes to rolling out these complex new technologies. You can't just flip a switch.
Exactly. A phased approach allows an organization to build capabilities, demonstrate tangible value, and learn in a controlled, iterative manner. The initial focus should be to start small and build confidence. This means selecting manageable, low-risk cases with clear, demonstrable ROI. Internal knowledge management chatbots for employees, or maybe claims file summarization tools, can be excellent quick wins to build confidence among staff, secure buy-in from leadership, and justify further, larger investments.
And it sounds like you need to test, learn, and iterate constantly. An agile mindset is crucial, with a course-correct early and often approach. Recognizing that not all initial pilots will be instant successes, right?
Yeah.
The learnings from failures are just as important.
Absolutely. Those learnings from less successful implementations are just as valuable as the successes, providing crucial insights into what works and what doesn't for that specific organization.
Okay.
And crucially, you must plan for scale from day one. Pilots designed as isolated experiments often create technical debt and cannot be easily expanded or integrated into broader enterprise systems. From the outset, teams should be thinking about the requirements for enterprise-wide deployment, including robust data pipelines, comprehensive model governance, stringent security protocols, and seamless integration with existing core systems. The overarching goal is to create reusable components, shared platforms, and consistent user interfaces that can be leveraged across multiple business lines, avoiding isolated islands of AI. Hashtag 2.33. Building the foundational pillars for success.
Long-term success with GenAI really depends on the strength of three foundational pillars: data, technology, and people. Seems straightforward, but probably complex in practice.
Oh, definitely. And of these, data readiness and governance is arguably the most critical and often most underestimated prerequisite. GenAI models are only as good as the data they are trained on and access. Many insurers struggle with fragmented, inconsistent, and inaccessible data sets locked away in disparate legacy systems. Imagine a claims adjuster in one system and an underwriter in another, with no shared, unified view of the same customer's risk history. It happens all the time. So establishing a strong, unified data foundation is paramount. This involves comprehensive data inventory, master data management to ensure consistency, and clear governance protocols defining ownership, usage, and compliance. Without high-quality, accessible, and well-governed data, any AI initiative, no matter how sophisticated, is ultimately destined to underperform or fail.
That makes sense. Then there's technological integration. How do you bridge those old often cumbersome legacy systems with these cutting-edge new GenAI capabilities without completely ripping out existing infrastructure. That sounds expensive and risky.
Well, insurers must develop clear strategies for bridging legacy and modern systems. Modern architectural approaches like application programming interfaces or APIs and microservices can create intelligent bridges that allow new AI tools to communicate with and securely leverage data from older, stable infrastructure. It's not necessarily about replacement, but about intelligent connection. And it's important to understand the power of combining AI technologies for maximum impact. GenAI isn't a replacement for traditional predictive AI. The most significant wins often come from using traditional AI models for complex analytics and predictions, and then using GenAI as an intelligent front end to translate those complex outputs into natural language for business users, making the insights accessible and actionable.
Okay. Finally, we come to talent, culture, and change management, which seems like the biggest human element to tackle in any large-scale technological shift.
It absolutely is. You must prioritize change management. McKinsey suggests investing twice as much in change management and user adoption as in the technical development of the solution itself. A significant barrier to adoption is often the existing talent shortage of AI-skilled professionals and, perhaps more acutely, resistance to change from existing employees who may fear job displacement or perceive AI as a threat. So, insurers must upskill and reskill the workforce through strategic investment in robust training programs. The goal is to create an AI-ready culture, viewing AI as augmentation, freeing them from mundane tasks to focus on higher-value activities. And lastly, foster cross-functional collaboration. Successful GenAI initiatives need multidisciplinary teams bringing together business leaders, IT specialists, data scientists, and experts in legal and compliance to ensure sound, aligned, and compliant solutions are developed and deployed. Hashtag 2.4, navigating the partner ecosystem.
So, with the rapid evolution of GenAI, insurers have a critical decision: build their own capabilities from scratch or partner with third-party vendors. What's the optimal approach in such a fast-moving landscape? Build versus buy.
It's rarely a binary choice. The optimal strategy often involves a hybrid approach. Insurers can leverage foundational, general-purpose models from large cloud providers like Microsoft Azure, AWS, and Google as a strong starting point. These provide the underlying power. However, for highly specialized, industry-specific tasks, like a claims damage assessment model pre-trained on millions of vehicle images, partnering with vendors who offer pre-trained models and deep insurance domain expertise can provide a crucial competitive advantage and accelerate time to market significantly. When it comes to strategic partner selection, deep insurance expertise from the vendor is absolutely critical. Due diligence, including rigorous proof-of-concept testing, is essential to ensure a vendor's solution is not only technologically capable, but also a good strategic fit for the insurer's unique needs and regulatory environment.
This raises an important question. When we talk about strategic implementation, what's the real game changer here beyond just automating a single task? What's the quantum leap?
Right. The greatest value is unlocked not by deploying isolated tools to automate discrete tasks, but by fundamentally re-engineering an entire business domain. An insurer might deploy a GenAI document summarization tool and see a modest 5% efficiency gain in one specific part of the claims process. That's a point solution. Fine, but limited. In contrast, an insurer that strategically reimagines the entire claims journey using an integrated suite of GenAI tools for first notice of loss intake, image-based damage analysis, automated liability assessment, real-time fraud flagging, and proactive customer communication can achieve truly transformative results. This end-to-end domain transformation approach, where multiple GenAI capabilities are seamlessly linked, can yield up to 14 times greater value than the deployment of individual point solutions. This reframes the strategic question from what tasks can we automate to the more ambitious and valuable question, what end-to-end processes can we completely reinvent?
14 times greater value. That's huge. And this leads to an unexpected benefit our source material points to. GenAI is a Trojan horse for legacy system modernization. How does that work? That sounds intriguing.
It's a brilliant way to put it, actually. The intense push to implement GenAI may also serve as a powerful catalyst for solving one of the insurance industry's oldest and most intractable problems: its reliance on legacy technology. Traditionally, modernization has involved long, expensive, and high-risk rip-and-replace projects. Nobody wants to do those. GenAI offers a compelling alternative. It can act as an intelligent translation layer capable of understanding old, often obscure code and extracting the precise business logic and data from legacy mainframe systems, then making that logic and data accessible to modern applications via APIs. This approach can de-risk and dramatically accelerate modernization efforts by allowing companies to build new AI-powered interfaces on top of existing stable core systems. In this way, a strategic GenAI initiative can become the Trojan horse that finally helps solve the legacy system challenge, unlocking decades of trapped value and paving the way for future innovation without the immediate need for a full overhaul.
While the potential is clearly huge, the path is not without significant challenges and risks that need careful navigation. This is where responsible implementation becomes absolutely critical. What are the key areas insurers need to be vigilant about as they integrate these powerful new tools? #tag 3.1 technical and operational hurdles.
Okay, first off, data privacy and security. The voracious appetite of GenAI models for vast amounts of data presents a significant security challenge. For example, using public models like ChatGPT for business purposes risks data leakage as proprietary or personally identifiable information, PII, entered into these models can inadvertently be absorbed into the model's public training data. Big problem. Insurers, as custodians of highly sensitive customer information, must prioritize private, secure, enterprise-grade GenAI solutions and implement robust data governance, including anonymization and encryption to prevent breaches and ensure compliance with strict regulations like GDPR and anti-pay.
Then there's the concern about model inaccuracy and hallucinations. We hear about this a lot. GenAI models are probabilistic. They can sometimes generate fluent, plausible-sounding, but entirely false outputs. In the high-stakes context of insurance, a hallucination could lead to improper claim denials, incorrect policy pricing, or even serious legal and financial liability.
Exactly. This inherent risk necessitates a human-in-the-loop approach for all critical decisions, where AI generates a draft or recommendation that is always validated and reviewed by a human expert before any final action is taken. This also highlights the problem of transparency and explainability, often called the black box problem. The complex neural networks powering GenAI make their internal decision-making opaque. In a regulated industry demanding transparency and auditability, if an insurer can't explain why an AI model declined a policy or set a specific premium, it faces significant compliance and legal risks. Explaining the reasoning behind an AI-driven decision is paramount. #tag 3.2, ethical and regulatory compliance.
This brings us to a significant set of challenges around compliance, particularly concerning algorithmic bias. If a model is trained on historical data that reflects past societal biases, for example, in lending or pricing, the AI will learn and perpetuate those biases, right? This could potentially lead to discriminatory outcomes in underwriting, pricing, or claims handling for certain customer groups.
That's a major ethical risk. Mitigating this requires using diverse and representative training data and implementing rigorous fairness audits and bias detection tools throughout the model's lifecycle, from development to deployment. Another significant challenge is the evolving regulatory landscape. Governments worldwide are scrambling to keep pace with AI's rapid advancements, resulting in a complex and rapidly evolving patchwork of laws like the Colorado AI Act and the EU's AI Act. Insurers must navigate this uncertain environment, which requires constant monitoring, legal interpretation, and agile adaptation of their AI systems. And finally, there's unclear accountability. When an automated system makes a critical error, establishing clear lines of accountability can be difficult. Is the insurer liable? The vendor who provided the model, the data provider. This ambiguity creates legal risks and underscores the need for clear contractual agreements and robust internal governance frameworks. #tag 3.3. Business and reputational risks.
Beyond the technical and compliance hurdles, there are significant business and reputational risks. The arms race we mentioned earlier with GenAI-enabled fraud is a big one. Fraudsters are also using GenAI to create increasingly convincing deepfake videos and forged documents, which means insurers must continuously invest in their own defensive AI capabilities just to keep pace with these evolving threats.
Indeed. Then there's the subtle but crucial risk of loss of the human touch. Over-automation, especially in sensitive and emotionally charged interactions like a major claim, can lead to a sterile, impersonal experience. This can severely damage customer satisfaction, erode trust, and ultimately increase customer churn. Striking the right balance between digital efficiency and human empathy with clear escalation paths to human agents is a critical business challenge that requires careful strategy. And finally, intellectual property, IP, and copyright infringement. The legal landscape around AI and IP is still very much being defined. Insurers could face legal challenges if their AI-generated content inadvertently infringes on existing copyrights. And internally, there's a significant risk of proprietary data and trade secrets leakage if employees use public GenAI tools for confidential work, inadvertently feeding sensitive information into a public model.
So what does this multitude of risks really mean for insurers? It sounds like it demands a much broader shift in how they approach governance, not just a tech fix.
Absolutely. This multitude of risks means responsible AI cannot be a simple compliance checklist or an afterthought. It must be a core business strategy, championed by the C-suite and integrated into the entire AI lifecycle, from data sourcing and model development to deployment, continuous monitoring, and rigorous auditing. This new technological paradigm also fundamentally alters the nature of corporate liability. The organization is increasingly liable for the outcome of the algorithm, regardless of the intent behind its design. That's a critical shift. The black box problem is not merely a technical challenge, but a central legal vulnerability. Insurers will be increasingly required to rigorously audit and explain their models' decisions to regulators, courts, and the public. This necessity will force them to prioritize explainable AI, or XAI, even if it means occasionally sacrificing a marginal amount of model performance in favor of greater transparency and defensibility. It's about building trust by design.
We've examined the current impact of GenAI and the immediate challenges insurers face. But where is all this heading? What's the really long-term vision for GenAI and insurance? Our sources suggest we're only seeing the first wave of what's possible. Hashtag tag 4.1. From point solutions to end-to-end domain reinvention. Revisited.
Right. We touched on this earlier, but it bears repeating and expanding upon. The future of AI in insurance lies in moving beyond isolated point solutions toward a complete AI-driven rewiring of entire business domains. This strategic shift involves seamlessly linking multiple GenAI and traditional AI use cases to create intelligent, automated, and end-to-end workflows for core functions, transforming entire processes rather than just individual tasks.
So paint a picture for us. What does a fully transformed claims process look like with this end-to-end reinvention that you mentioned, where it delivers potentially 14 times greater value?
Okay, imagine a claim initiated through an empathetic AI-powered conversational agent handling the first notice of loss, understanding context, maybe even providing initial guidance. This agent then instantly triggers other AI systems to perform immediate damage assessment from submitted photos or video, run real-time fraud screening against vast databases, accurately check policy coverage, and for simple, validated claims, process the payment to the policyholder all within minutes, potentially without any human intervention. Human adjusters will be reserved for managing only the most complex, high-value, or emotionally sensitive cases, acting as expert navigators and problem solvers. This end-to-end reinvention is where the most significant value, estimated to be up to 14 times greater than that of isolated point solutions, will truly be unlocked, fundamentally changing the economics and experience of claims. Hashtag tag 4 and 4.2. The dawn of proactive and predictive insurance.
This next point is perhaps the most profound long-term impact. This shift from reactive indemnity, which is essentially paying for losses after they occur, to proactive risk prevention, actively working to prevent those losses in the first place. That's a huge philosophical shift for the entire industry.
It truly is. The traditional model is basically collect premiums and pay for losses after they occur. The future model, powered by GenAI combined with real-time data from IoT devices and advanced predictive analytics, will be to intervene and prevent those losses from happening. And this isn't a distant fantasy. Zurich Insurance Group, for example, is piloting a system in the UK that uses AI to predict flood claims weeks in advance by analyzing weather patterns, river levels, and terrain data. This allows them to proactively warn at-risk customers and provide mitigation advice. This completely transforms the relationship from a simple financial backstop to a true active risk management partner.
And this will also accelerate the adoption of hyper-personalized and dynamic insurance products, I imagine. Usage-based insurance for vehicles rewarding safe driving, smart home sensors offering discounts for preventative maintenance, all dynamically adjusting premiums in real time.
Exactly. But this raises an important, even paradoxical question. If insurers become highly effective at preventing claims, what does that do to their traditional business model, which relies heavily on investment income generated from collected premiums, often called the float? If claims diminish, so too might the premiums needed, shrinking the float. This creates a strategic paradox. Success in prevention could erode the very foundation of their current financial model. To navigate this, insurers must develop entirely new revenue models based on these proactive services. This could lead to a future bifurcation of the industry, with traditional indemnity carriers on one side and transformed incumbents or InsurTech 2.0 players on the other. These new entities would operate more like subscription-based risk management service providers, charging recurring fees for continuous monitoring, real-time alerts, and active loss prevention. The focus shifts from indemnification to continuous value delivery.
Looking even further ahead, our sources point to the next wave of innovation, agentic AI. These aren't just tools that respond to prompts, but autonomous AI systems that act as virtual coworkers, handling complex, multi-step tasks with minimal human direction. Can you give us a concrete example of what that might look like in an insurance company?
Certainly. Imagine an AI agent managing the entire life cycle of a low-complexity commercial insurance policy renewal. It could independently analyze the client's past data, identify subtle risk changes from external data feeds, generate a renewal offer with adjusted terms, communicate with the client via a sophisticated chatbot to answer questions and address concerns, and then process the final renewal documentation all autonomously. A human might only intervene if an anomaly or complex negotiation arises. It truly acts as a virtual, independent agent within the organization.
So the future workforce becomes a seamless collaboration. Humans setting strategy, managing exceptions, providing ethical oversight, and leveraging their unique capacity for empathy, while AI executes operations, analyzes data at scale, and generates insights with unprecedented speed. So what does this all mean for the very structure of these organizations and how they govern themselves when AI agents become so autonomous?
That's a critical point. Current governance models are simply inadequate for autonomous AI agents. They're built around human decision makers and linear auditable processes. When an AI agent can independently execute a complex series of actions across multiple corporate systems, like processing a claim, updating a policy, and issuing a payment, the traditional points of human review and approval can largely disappear. This means existing governance structures will be wholly inadequate for managing the speed, scale, and complexity of autonomous AI operations. Organizations must begin to proactively design the governance frameworks of the future. This will involve moving from periodic manual process audits to real-time algorithmic monitoring, developing automated controls that can supervise the AI agents themselves, and creating new executive roles, perhaps like a chief AI ethics officer, to provide high-level strategic oversight for this new augmented workforce. It's about governing algorithms, not just people.
We've gone from the granular details of claims processing to the grand vision of a proactive, AI-powered insurance future. It's clear that GenAI is not just changing the how, but the what and why of insurance as an industry.
Indeed. This deep dive shows us that the future of insurance isn't just about adopting new technology. It's about a fundamental shift in mindset, a constant adaptation to new risks, and a continuous pursuit of new capabilities that redefine value for both insurers and their customers.
As we wrap up this deep dive, consider this. If the insurance industry truly shifts to a proactive, prevention-focused model driven by AI, how might that fundamentally change your relationship with your insurer? From merely a safety net to a continuous, active partner in managing your well-being and assets. What new responsibilities or even opportunities might that bring for you as a policyholder in a world where your insurer might warn you about a potential flood before it even rains? That's certainly something to ponder long after we wrap up this deep dive.